on Monday, we have worked on the section for the operating activities. Okay, so we have learned how to prepare the portion of the cash flow statement for the operating activities. So for the learning objective number 3, we prepare the investing activity section. Okay, and under the investing activity section, those cash flows relating to the long-term asset, so non-current asset accounts, such as property, plant, and equipment, intangible asset, softwares, patents, right? So those ones would be the accounts, asset accounts that is relevant to the investing activity. So they're reported the same way under both direct and the indirect method. So when you use direct versus indirect method, the difference between them is how they get the cash flow for the operating activity. But for investing activity and the financing activity, they are the same. Okay, so the difference between the two methods is really on the operating activities. Asset acquisitions uses cash, so you need to use cash to acquire asset. Your cash balance will decrease. Disposal, when you dispose the asset, you will receive cash, right? You will receive cash. From last lecture, we have seen the depreciation expenses is a non-cash charge. Okay, so that's a non-cash charge. It reduces your net income, but it will not reduce your cash balance because this is not a cash transaction. So in this example, we can see that you first label this line as investing activities, and then under this investing activities, you have different lines about the transaction. So purchase building, that's going to take money. So you use the 120,000 to purchase a building, so that's a negative. You purchase land, that's a negative 95,000. Purchase of equipment, that's also a negative 25,000. So finally, we have proceeds from disposal of equipment. Okay, so you dispose the equipment and you get $4,000 for that. So when you consider all these 4 transactions together, the net is you used in total $236,000. Okay. So that's kind of how you're going to prepare the investing activity section. So you can see this is relatively easier compared to the preparation for the operating activity section. Okay, so this is my learning objective number 3. Does anyone have any question? Okay, let's see. No question? Okay. Okay, so learning objective number 4. Okay, so this is the section we are preparing financing activity section of the cash flow statement. So financing activities, okay, we analyze the changes in non-current liability, so long-term liability, and equity account. Okay, equity account. So for example, you have notes, loans, mortgages, and bonds payable. Okay, so these are all long-term liability. Accounts payable is a current liability, but like notes payable, loans payable, mortgage payable, and the bond payable, will be the non-current long-term liabilities. The changes in these accounts will relevant to the financing activities. In the previous chapter, we have learned about the bonds, right? If you remember, we have amortization of the premium or discount, right? I remember I even showed you how to do this amortization schedule in Excel, right? So this amortization is just like the depreciation, right? These are not cash transactions. So the amortization of premium and discount on the bonds, these ones have no effect. We also need to analyze the equity accounts, so including share capital and the retained earnings. Okay. So this example, we can see that. So for this to start this section, you have a line description financing activities, and then there are the different items. The first one is addition to mortgage payable. Okay, addition to mortgage payable. So that means your payable balance increased. Right? That's why it's called addition to mortgage payable. So you have more liability, you have more debt, you borrowed money, right? So you have cash, your cash should increase, right? So you borrowed money, $124,000, your cash increased, right? Your liability increased, your mortgage payable increased, right? Repayment of mortgage payable, so that's the opposite, right? It's gonna take $6,000 cash to reduce the mortgage payable balance by $6,000. Right? You issue a common share, right? So you receive $5,000 by issue common shares, and you gave the cash dividend. Okay, cash dividend, that's gonna reduce your return earning, right? So that's gonna use cash. So that's a negative 28,000. So when you consider the four numbers together, the net cash provided by financing activity is 95,000. So for financing activities, you have cash inflows, right? You have cash comes in. So we have finished all the three sections: operating activities, investing activities, and the financing activities. Okay, so now we need to combine that three sections together to complete the statement of cash flows. So combining the three section number together, you would get a net increase or decrease in cash for the period. Okay, and then you know your beginning balance of the cash, and then you just figured what is the net change. So your ending cash will be able to find out, right? You'll be able to find out on the ending balance, right? So the cash ending balance position has to be consistent. So when you're combining all them together, net cash provided by operating activity is 163,000. Net cash used by investing activities, 236,000. And net cash provided by the financing activities, 95,000. In total, I have a net increase in cash, 22,000. January 1st, the cash balance is 33,000. And over the period of time, the cash increased by 22,000. So my December 31st ending balance of cash is 55,000. Okay, does that make sense? Do you have any question on this? So I'm going to our course website on ValuePlus. Okay, so this is our module. Which is module? This is our module 9. Not sure if you guys have finished this assignment yet. Okay, so this is the bonds payable. Some of you have been working on this. So let's see. What about module 10 assignment? So I'm going to walk with you a problem that will directly help you with writing with the assignment. Okay, so I'm going to use the assignment, okay, as a question. So then when you prepare your assignment, okay, and it's going to help you, right? So let's see which one I'm going to use. Multiple sections. This one, financing, investing. This one is the financing, investing. Here. Okay, are you able to see this question? Can you see it on your screen? Okay, so you know in the future you're gonna do a question similar to this, right? So now I'm going to help you to do this question, okay? So this is the question. We have a statement of income for this corporation. Sales, cost goods sold, and gross profit. I have expenses, salary expense, operating expense, depreciation expenses, income before income tax, and then income tax expenses, and net income. Additional information, accounts receivable increased 33,000 during the year. Inventory decreased 550,000. Prepaid, which relate to admin expenses, increased 165,000 during the year. Accounts payable to suppliers of merchandise decreased 385,000 during the year. Accrued salary payable decreased 110,000 during the year. Income tax payable increased 71,500 during the year. Prepare the operating activity section of statement of cash flows for the year ended November 1st, 30th, 2025, using indirect method. okay, using indirect method. And which one I was working on? Sheets 1, 2. This one. Okay, so I'm going to do this with you together. Okay. So you are able to see half of the screen is the question. The other half of the screen is the PowerPoint slide, right? Okay, is that clear? Are you able to see everything okay? Okay, awesome. Okay, so what should I do? So for indirect method, using indirect method. So I will start with net income. So net income is 1,543,300. And then I need to add something, right? I need to add. So take a look at these items. Which one should I add back? Which one is a non-cash transaction that only reduce net income, but does not reduce cash? Yeah, depreciation expense. Yeah, that's correct. So you have to add back depreciation expense. So that is 88,000. Do you have any losses or gains? In this question, we don't have losses or gains, right? Now we have to move on to the adjustment on the AR and on the AP, right? So the first one, let's go through these bullet points. A, accounts receivable increased. So accounts receivable is a current asset, right? So accounts receivable increase in accounts receivable. Is that add or deduct? Increase in accounts receivable. Is that a deduct or an add? What about decrease in accounts receivable? You think about if you decrease accounts receivable, that means you are collecting money, right? Because when you collect money from the customers, your accounts receivable balance will decrease. So decrease means you are collecting money, your cash is increased, right? So decrease in AR, that means it's a positive, right? You are increasing cash. But increase will be the opposite. So therefore here, you need to deduct increase. You need to deduct increase in the AR, which is 330,000. Inventory decreased. Inventory decreased, what does that mean? So inventory decrease in inventory. So you are selling stuff, right? When you are selling stuff, your inventory will decrease. You're gonna receive cash, right? You're gonna receive cash. So this is the time you receive cash, right? You add the decrease in the inventory. So what is that amount? That is 550,000. Very good. Yeah, good job. Yeah. Now number 2 point. Prepaid expense increased. So prepaid expense increased. That means you use cash, right? Your current asset increase that requires cash. So you have to deduct. Increase in prepaid. Right? Because you pay this ahead of time. So you use cash, right? So this deduct, so what is that? 165,000. Number 3, accounts payable to suppliers of merchandise decreased. So accounts payable to supplier decreased. How can that decrease? Well, you pay them, right? Only when you pay them, the liability can decrease. So you pay them, you use cash, right? So you deduct decrease in AP. 385,000. Okay. Now accrued salary payable decrease. So again, this is also deduct, right? Because liability decrease means you use cash. You have to deduct. Decrease in salary payable. So this one is a decrease as well, 110,000. The last one, income tax payable increase. So increase means that you owe people more money without paying them cash. So you save the cash on your side. So you add income tax payable. So this one is 71500. So what is the cash provided by operating activities? So what is this? Boy, it's gonna take me a while as well. Oh, okay. What should I do? So this one is 220. This one is 0.5. Oh, this one. Okay. So that's good. Actually, this one together, 165 plus 385. This one equals 550. 550. So just canceled out this 550. So this 3 actually canceled out. That's good. And then this is 330,110. So the 440. Okay. So I just need to do this for numbers. So 1,543,300 plus 88,000 minus 440,000 and plus 71500. So what I get is 1,262,800. Did you get this number? Is that what you get? Okay, awesome. Thank you. So now I'm a little bit concerned. Is this the right answer? Okay, I don't know the answer. Let's see. Okay, good. Look at that. That's exactly the answer we have. Any question? Any questions on this? Does this make sense? In the exam, there's gonna be a question like this. Thank you, Comrade. Yeah, I think you followed along really well. Yeah. Anyone else? Are you guys comfortable with this? Thank you, Demi. Because in the exam, there will be one question like this, right? So it's guaranteed. I will ask because it's important to know how to prepare the cash flow. Okay, if you are comfortable, give me a thumb up. 1, 2, 3. Give me a thumb up. Okay, awesome. Thank you. So that's this question. So you just have to think about, right? That change in accounts in current asset, right? If the current asset increase, you have to use cash. Right? If your inventory increase, you use cash to buy inventory, right? So that's a deduct. So when the current asset increase, that's a deduct. So increase in AR, that's a deduction. Increase in prepaid expense, that's a deduction, right? So when your current asset decrease, so those current assets are converted to cash, right? So your cash increase. So when your current asset decrease, they were converted to cash, right? So the decrease in current asset, it's a add, right? So accounts payable is the opposite, right? Decrease in current liability. Well, how can you decrease your liability? Well, you pay them off. You pay them money. You use cash. So if your current liability decrease, right? So you are using cash, you need to deduct. Okay. If your current liability increase, you have more debt, you save the cash on your hand, right? Without paying them. So that's a add, right? That's an add. So that's this question. Okay, so now let me ask you this question. Okay, so this corporation reporting the following items on its statement of cash flow. First, you tell me which activities they belong to, which section they belong to. First one, repayment of long-term debt. Which section? Operating, investing, or financing? Repayment of long-term debt.
Finance.
Financing. Thank you, Cameron. That's correct. Second, decrease in inventories. Decrease in inventories. Operating, right? This is the current asset. Yeah. Number 3, depreciation of PPE. Depreciation of PPE. Which section this item goes to?
Operating.
Yes, operating. Because we have to add it back, right? We need to add it back. Payment for purchase of PPE.
Invest.
Investing. Thank you. Dividend paid to shareholders.
Financing.
Good. Thank you, Demi. Decrease in provisions. Provisions are current liability. Decrease in current liability. Operating. Awesome. Proceeds from long-term debt. Proceeds.
Financing.
Financing. Yeah, awesome. Thank you. Amortization of intangible asset. So amortization is just the word as depreciation. Depreciation. Yeah.
It doesn't be okay.
That's correct. Yeah. So depreciation is for PPE. Amortization is for intangible asset. Okay. So they are the same idea but different terminologies. Okay, so that's good. Boy, we're gonna finish this assignment together. So this one is preparing financing activity, right? Financing activity. So I'm going to use this part. So preparing the financing activity. So below is selected information for the company for December 31st. During 2025, a new mortgage loan of 90,000 was received, and the principal payment is 7,500 were made throughout the year. Net income was 88,000. Dividend declared were fully paid in 2025. So we have mortgage payable. We know the balances for 2024 and 2025, common shares, and returned earnings. So we need to prepare a financing activity section for the statement of cash flow. So we have to first write financing activities. Okay. So now let's see a new mortgage loan for 90,000 was received, and the principal payment of 7,500 were made. Okay. And net income was this. Dividend declared was fully paid. Okay, so this one is not that obvious because you don't have the information was not given to you directly. You have to figure out some of the information you need. Okay. So first, let's take a look at this mortgage payable. Okay, the mortgage payable. So the opening is 145,000. Ending is 227,500. So what is that difference, right? So if I'm thinking about comparing the change, right? So I go by 227,500 minus 145,000. This is the change in the mortgage payable. What is that? This one would be 82, right? 82,500. So the difference, okay, the difference is 82,500. Okay, why it is 82,500? Okay, so I'm gonna show you. First, you have a addition to mortgage payable. So that addition is 90,000, right? So you have a new mortgage, right? So you have addition. So when you have a new debt, you receive the cash, $90,000. And then you pay you have a payment, right? The principal payment. So you pay the principal payment is 75,000. So that's the repayment of mortgage payable for 7,500. Now think about the difference, right? 90,000 minus 7,500. What is that? That's 82,500. Now you understand why the mortgage payable balance increased by 82,500. They have a new debt of 90,000. So that's 90,000 balance increase. But they also have a principal payment 7,500. So that would the net is an increase of 82,500. When you compare the common shares, right? Opening 75,000, ending is 105,000. What's the difference? The difference is 30,000, right? So 30,000 you issued common share. So this is gonna increase your cash for 30,000. And you also pay the dividend, right? And the dividend were fully paid, right? So we know the dividend paid will reduce your cash. The question is, what is the amount of the dividend declared? So we know this dividend paid is going to consume your cash. It's going to be a deduction. But the question is, what is the amount of deduction, right? How much? What is the amount of dividend declared? Can anyone tell me? This is the tricky part of the question. How can I know the amount of dividend paid? Anyone? Unable to do that? Okay. I will show you how to do it. Okay, so I'm going to use this equation, return earnings, beginning balance, plus net income, minus dividend, equals returned earnings, ending balance. Is this correct? Is this equation correct? So you have an opening, beginning return earning balance, and then the net income will increase your return earning, and the dividend will reduce your return earning. So you have an ending balance, right? Is that correct? Yes or no? Yes? Okay, good. So what's my beginning return earning? So my beginning return earning is 60,000. 60,000. Add net income. Net income is 88,000. Minus dividend, I don't know. And equals return earnings ending balance 130,000. So I can solve my dividend equals, so 148. So that's 148,000 minus 130,000 equals 18,000. So my dividend paid, it's fully paid, right? 18,000. And then I would say net cash provided by financing activities. So this one gives me 82,500, 82 plus 12, 94,500. Okay. So the net cash provided by the financing activity is 94,500. Does this make sense? Okay, so if you are okay with this question, please give me a thumb up. 1, 2, 3. Okay, awesome. Okay, next question. Let's see. Okay, so we have done the operating activity. We just did the financing activity. And this time we are going to do a investing activity, okay? And then we are done today, okay? So this is our last. We're gonna do a investing activity. So in this question, the company reported the following information in thousands at December 31st, 2024. Okay, so we have comparative numbers, 2023, 2024. Long-term investment, 200,000, 95,000. Land doesn't change, 230,000. Buildings doesn't change, 330,000. Cumulative depreciation, buildings, 2023, that's 65,000. But because it's a cumulative depreciation, that balance is increasing every year. So at 2024, that's 90,000. Okay. For land, we do not depreciate land. So there is no cumulative depreciation for the land, but we do depreciate buildings. We have a cumulative depreciation on the building. Equipment. Okay, so there's maybe some purchase, right? 395 versus 540. And the accumulated depreciation equipment, 200. Okay. The first question, the company purchased a long-term investment during the year. None was sold. So they do purchase long-term investment during the year. None were sold. The company purchased the equipment during the year, sold some equipment. The cost is 110,000, had a carrying amount of 60 for a gain of 15,000. So prepare the investing activity section. So again, first, you have to write down investing activities. So long-term investment, right? If you think about the balance, so I'm gonna put this here. Long-term investment, the change, right? Change in long-term investment. So I'm gonna use 200K minus 95K. So the company purchased the bullet point number 1. The company purchased the long-term investment during the year. None was sold, right? So they have all the existing investment, but they have addition. What is addition? The addition is the difference. That's 105K. So basically, they have a new investment that is 105,000. So here we would say new investment, and that's gonna require cash, right? You're gonna need a cash to purchase that investment. So that's a deduction. 105,000. Land, the balance is the same. So nothing happened with land. Buildings. So 330,000, no change, right? And the cumulative depreciation, that additional 25, is just the depreciation expense on the building, right? 25,000. So there is no purchase of building, no disposal of building, right? Now, equipment. So equipment is a little bit interesting. Okay, so I'm going to do a few things, right? Okay, so the company purchased the equipment during the year. They sold some equipment, cost 110,000, had a carrying amount of 60,000 for a gain of 15,000. So I have to use the T account here. Let me see, use the T account, okay, for equipment. Okay. So I have a T account here, and this is going to be equipment cost, right? This is equipment. So I start from 395. So my starting position is 395, right? So they said the company purchased equipment. So how much does that cost on the new purchase? I don't know, right? I don't know. So I had to, oops, sorry, I put it in the wrong side. This is I side, right? Yeah. And now they have addition, right? So they add a new purchase, but I don't know how much the cost is. And they sold some equipment that cost 110. So when they sold the equipment, they're gonna reduce the balance 110. So I'm gonna put this number on the other side, right? So that's kind of where am I at, right? Initially, it's 395. I purchased the equipment, I added unknown, but I sold 110. And what's my ending balance? My ending balance here is 540, right? So that's kind of what I'm thinking. My beginning is 395. My ending is 540. I have an increase in the purchase of equipment. I also sold the equipment. So can I solve that question mark? So I have 395 plus the unknown x minus 110 should equal 540. So what is my x? Equals 540 minus 395 plus 110. So this equals, okay. 245. Is that correct? $255. Yeah, is that 255?
275.
Sorry, what is that?
270.
275. Wow, I'm really off. Are you sure? Okay, can someone help me? What is my X? 255. So I have student got 255, 275. 255? Okay. So I think it's 255. So you purchase that equipment. That cost is 255. That's gonna cost you money, right? So you're gonna have purchase new equipment. This is gonna cost you 255,000. What else should be part of this? Can you think of what else should be part of this? Anything else? There is one last thing we need to consider. Sale, yeah, because you also sell, there's the sales of the equipment, right? So you're gonna say, well, okay, I receive cash proceeds of sale equipment. How much did you sell that equipment? Do you know? Well, it was not given directly. You had to figure it out by yourself. How can I know the proceeds of the sales of the equipment? So the carrying amount is 60, right? So the carrying amount is 60, and you sell it for a gain, 15. So that tells me how much the proceed is. Yes, camera print. That's correct. Carrying amount plus gain, right? So you sell it for 75. The carrying amount is 60. The difference, the amount exceeding the carrying amount is the gain. So you sold it for 75. So that's a cash increase. Okay. So that's it. So now I would say net cash used by investing activity. So that's gonna be, so that's 360. 360, this one is 70. So that'll be 285, right? So the total of that will be 285,000. Okay, let's see if we are correct. Oh yeah, good. We are correct. Look at that. So purchase of long-term investment, it's a negative 105. Disposal of equipment, that's our 75. Purchase of equipment is negative 255. So the net cash used for this investing activity is negative 285,000. Okay, does this make sense? Does anyone have any question? So if you understand what I have done, give me a thumb up. 1, 2, 3. Give me a thumb up. Okay, good. Thank you. You make everything clear. That's now easy for me. Okay, good. Yeah, thank you. I'm glad I can be helpful. Okay, so let me